like the step of trading. This is very crucial. Successful trading requires understanding current market condition and adapting to the market. What is it that market conditions are always changing? We need to understand changing market conditions to know when and in what condition the market acts. See, the world remains the same, but at night the world looks different. The world feels different temperatures, feels different, humans feel different, and we react differently from the end of the day. The same place feels different during the day. So we have to understand what is happening in different market conditions and use strategies accordingly for each market condition. So we have to condition in this market either market sideways or market trend. We call it the market is ranging or market. Some say it is consolidating, so this market is trading. The market will be in a trend range or in a trend. The trend is also of two types. If it is going up, it is an uptrend. If it is going down, it is a downtrend. Now, how to identify an uptrend? We will be getting higher highs and higher lows. How to identify a downtrend? We will be getting lower highs and lower lows and price ranging. Have we defined the channel? Are we unable to make a higher high in it? Sometimes we make a higher high and then create a lower low. We are not able to make a sequence out of these events, and we are not able to break any support or resistance and turn resistance into support or turn support into resistance. This is the meaning of range. Sometimes it can happen that we keep going to the previous high, but we are able to turn it into support. We come back into the range, so that means the market is ranging, so we have to be very careful to understand. So now in this chapter, we will discuss how to identify trend and range, because trend strategies are different and range strategies are different. Now we introduce you to the trending market. In a trending market, the price consistently moves in one direction, either up or down. As I discussed, an uptrend has higher highs and higher lows, and a downtrend has lower highs and lower lows. It is important to identify the trend for forward trading strategy. We have to identify the trend. If there is an uptrend, where should I enter now? In a downtrend, where should I enter? Now there is a trend. Now the resistance has broken. If it is turning into support, the Fibonacci 600 level is coming. The indicator is giving divergence. The RSI pullback is overbought. So I will just enter buy in the uptrend. The opposite can be said for downtrend. So we have to be very careful. We have to adapt our strategy according to our market condition. What are the ways to identify the trend? First, we discussed higher high and higher low, low and high. How can we identify them? We can do a simple trend line. Usually observe price action direction by connecting our highs. If the trend is going down, meaning the market. If the trend is going up, meaning market. And mostly what we discussed earlier, we will try to stick to major condition trading, because major conditions are liquid pairs, in that the market trending is good. In liquid pairs, what happens is that when the market is in a trend, keep on following the trend. They give you an opportunity to enter. In non-liquid pairs, what happens is that the market has gone in a direction. There is a spike up, then it spikes down. They make no sense. You cannot trade to the other. You are doing insider trading. Those who are market movers, you makers are sitting with them and cheating, so you can know. Otherwise, you have no idea that it is just gambling. And as we have discussed throughout our course, we do not want to do gambling at any cost. Another thing, we are taught to identify trades using trend lines, and we have other tools that we discuss, indicators specifically made to identify whether the market is in a trend or range. That is called ADX. ADX measures trends. We discussed above 2020, the trend is strong. Below 2520, the trend is weak. The market is in a range. So remember that the ADX indicator is not a leading indicator. Does not help trade future trends. We have another option for identifying trends. That is called moving average. How can we identify trends with moving averages? Think about what we discussed. Simple crossover. What moving average? Now draw, for example, here we have drawn 7, 20 and 65 SMAs. Now when 7 crossed 20 and 65 and 20 crossed 65, meaning we have entered a bearish trend, and as long as it stayed below, we were 3 in the best trend, helps identify the current trend. But as always, this is a lagging indicator, so we will use it to just help identify the current trend. Another way to identify trend we discussed was Bollinger Bands. When we stay below the middle line in Bollinger Bands, it is considered bad if it is above. And another way we can use Bollinger Bands in a trending market is simple. Draw two Bollinger Bands, one with a 1 deviation setting and another with a 2 deviation setting. Whenever the band expands and the price enters the deviation zone between 1 and 2, we keep selling. And whenever the price enters the upper band between the 1 and 2 deviation zone, we will buy. This just helps confirm the trend. So, you can use any of these ADX, moving average, trend line, and Bollinger Bands, which suit you the best. So what is the conclusion? So when we identify trends, we depth according to that, we focus on trending pairs and maximize profit potential for trading pairs. The market direction keeps moving, so we try to maximize on that single move. So we have to keep an eye on this and use this to understand how to trade trending markets, how to identify trending markets, and the rest is strategy and trading system. We will develop a trading plan. Under that, the trading system of the job will be mechanical. You will decide that, so you can always use that to help you. And one thing is that we discuss trending markets. In ranging markets, keep in mind that we just serve the top of the range and buy at the bottom of the range. There is no science, so best of luck. Now we need to understand how to differentiate what is a correction and the price hasn't eaten the price, it has come back. Now what is coming back? Is it a correction or a reversal? If it's a reversal, it will break the previous low and go down. And if it's a correction, it won't be able to break the previous low. Now we will discuss how to identify this and what the benefit will be. The benefit will be that due to sudden move reversals, the profit we have already made and give back to the market, we will avoid giving it back. So now let's discuss this.